Hey guys, please take the time to review as well as understand this disclaimer I'm going to give you. My name is Dontez Lindsay. I am the General Manager of Ducks Trading LLC, as well as the lead trainer of StockCraft. I'm not a financial advisor, nor a CPA, and the content I create is for entertainment and educational purposes only. I trade in my account, and everything I do is hypothetical in nature because it doesn't happen in your account. My experience with trading is not typical, nor does it guarantee that similar results will be obtained by you. I am merely sharing my opinion with no guarantee of gains or losses in investments. Remember, day trading can be extremely risky. You should be prepared to lose all the funds that you use for day trading. In particular, you should not fund day trading activities with retirement savings, student loans, second mortgages, emergency funds, funds set aside for purposes such as education or home ownership, or funds required to meet your living expenses. Further, certain evidence indicates that investments less than $50,000 will significantly impair the ability of a day trader to make a profit. Of course, an investment of $50,000 or more will no way guarantee a success. Please take the time to review as well as understand this disclaimer for your safety as well as mine. With that out of the way, let's get into the content. So the time frame is pretty much around 2 weeks. I'm going to talk about 8 tickers. I'm going to give a lot of my insights on what happened over the past 2 weeks. We're talking late February, early March. I'm going to give you a recap, give you a review, and a light analysis of what each of those tickers meant to me, as well as a few other recent events that were happening during this time, which include, Ukraine, Russian war, CPI reports and hikes coming out soon, and what kind of positions I made during this time or lack thereof in positions. At the end of the day, you're going to see me make some mistakes. You're going to see me make some assumptions, and you're going to learn. All right, guys. So first thing I want to cover is IMPP. So IMPP, this is an energy sector stock. Again, we're in late February, early March era, and this ran from 40 cents up to $2, and we were treating this like a multi-day runner because, like, when you look on the daily, it's creating new highs, it's coming back, and it just looked like something you can get a little bit of pullbacks on, like 30% here, 20% there, and then it made a new high into the early March. And when it broke that high, if you look on the like yearly, this only came out in December. And so with that in mind, it has a clean chart. When you have a clean chart, you can go to as much of a high as you want, really. And so with that out of the way, I just wanted to give a little broader understanding of what's happening relative to like that week. That's where, a hype in the energy sectors come in. So you have crude oil being affected by the president's statements and the Ukraine-Russian war, the sanction that we put on our oil, a set of like Russian oil. Like, it pretty much gets into that gray area. At the end of the day, we saw oil prices come up to like 120, 130, and that's why you were seeing all energy and oil related tickers just going crazy. And that started somewhere in late February, and then it continued in early March. And so this Friday through Thursday, that's where you're seeing it dance anywhere from 110 to 130. And that's the 9th to the 3rd of March. Now, you can see how IMPP, which is a petroleum company, how it reacted to all this. This went from something that was considered to be like a multi-day runner to a complete breakout. And then from that point where it was a breakout, we started treating it as more of a parabolic action, and just using dollar block and other signals, indicators and stuff like that to figure out when is the momentum going to shift. And now that it cracked a little bit, more recently, we're looking for something more of a bounce short. Pretty much means, on the daily, you're looking for a lot of volume, a lot of extension, and then finding that congested area and then shooting your shot, trying to short that area. Now, with those concepts, Remember, this opportunity only came from having a very hot energy and oil sector that sparked from geoeconomic events and stuff like that. Coupled with the idea that the small caps have been dead for a long time, a lot of people weren't prepared, me especially, because I have the best timing. I just got slightly addicted to a video game and put down my discipline like from Saturday to about Monday, because I got into a video game. Other than that, completely caught me off guard. Had the tools to see what's happening, but not enough courage and discipline to actually execute on what I thought. Yeah, I ended up holding back all those strong intentions and revenge trading. You'll see something about that later. But in the meantime, going back to that same wind that's coming from the hype in the energy sectors, that spread over other tickers. Some of those other tickers, we'll talk about them. So one of them would be HUSA. Now this is the one with the most extension recently. The one that actually had the most extension is actually a different one. We'll talk about that later. So with HUSA, this went from $1 all the way up to 17 in the pre-market, and it opened around like 16. Now, just looking at this, you see there's a lot of extension on this, like over 400%. And if you've ever been in our streams or our chat and stuff like that, this kind of parabolic action, it's just very top heavy right now. But you also don't want to just rush into this, because recently you've seen other low float energy sector stocks go up into the hundreds, but we'll get into that one later. HUSA, this was a special case to where not only did it go from $1 to 17 in 2 days, which is a really good number to short, it also had a decent sized market cap and float, which made it a lot more manageable when it comes to holding the short for longer, because there's more people that can get trapped at specific levels. Now, adding that range to that amount of float, which also can signal how many people can potentially be trapped at that point as bag holders, this became like the ideal trade. Now, I also have rules to where these rules are meant to keep me from imitating things that are not worth imitating or acting on my impulses that get me in trouble. And so when it came to HUSA, I was not prepared for an actual short on this. So I hesitated like the entire way, but I could still recognize what's happening, and also trying to keep tabs or like awareness on my SPY position, which is a much bigger position than I could potentially make on this. I feel like I pretty much set myself up to not trade anything today because I was so focused on my SPY for a long time. And then I lost the actual actions and discipline that comes from trading every day. Now, mind you, I've been reviewing and analyzing every day, which means, I could still have the awareness of like what could potentially happen. Where's the opportunity and everything like that. But executing, that's harder for me, to where at the end of the day, there's fear and there's doubt, and those grow from inaction. And I haven't been doing a lot of executing. And so being able to execute, I have to give myself a certain scenario or like situation in my head, all this imaginary stuff, like my emotions and memory and my imagination. I have to do it in a way to where it gives me enough courage as well as enough resolve to hold it through the entire execution. And if I don't have that very specific amount of confidence, I want to say, but not only confidence, it's mostly patience, which I describe all those terms as pretty much my level of certainty that a certain result is going to show. I don't make the trade if I don't have that certain level of certainty. And my biggest problem with HUSA, even though this was legit the most ideal out of all of these, not only did I collect a lot of fear from the constant inaction from, small caps not being a thing for a really long time. That added to the fact that this, as well as a few other tickers, were all Amex or NASDAQ, or not NASDAQ, or New York Stock Exchange. Then added onto the really recent memory of another energy sector going to 100. With those three facts by themselves, it was really hard for me to pull the trigger. And holding back that intention, I ended up revenge trading in the opposite direction later. But we'll talk about that like briefly later. But hopefully you got that. This was pretty much second green day, and then it hit the dollar block, became a double intraday top, used the $14 area, came all the way down. I give a few hints on what happened in the snippets I'll show you in the later half of the video. And that's pretty much, when you have stuff that's like this overextended, you don't look for that normal 20%, 30% drop. You're looking for something like from 50 to 75% drop, because that's just how gap up shorts work, especially if there's warrants. And that's where you can get up to 80, 90%. But main thing is, the bigger they go up, the harder they go down. Remember, time is also a thing. So this only took minimum 3 days to get up to that high. And I don't even really say 3, because this was in the pre-market and then it dropped. So enough said. Now going over to the next one, because remember, keep this in mind. It's all relative to the recent pressure from the Fed's announcements, the recent pressure from the president, the Ukraine war, the energy sectors themselves, just bringing back the small caps with all this madness and shenanigans. They were all giving a lot of wind to any energy or oil stock, and that includes the small caps. And so other than IMPP, HUSA, we also had ENSV, NINE, USEG, and INDO. Oh, actually, I forgot one. MRAPS. Now this one was a little less on my radar, so I didn't look at it as much. But with these, we can kind of put them all in the same category, except for NINE. This one's a little bit different because it also had earnings. So this one beat its earnings, and that usually means it has a little bit more stability. And with that in mind, you want to think of SSR. And so with SSR, that takes out a certain amount of people that can short. And what that is, you are missing some selling pressure. When you have earnings, at the end of the day, that's a catalyst for people to pull the trigger to buy. When you hear earnings, you think of people from the long side, long-term investors covering their long-term gains. And the thing that gave them that idea of, oh, I need to come out of the shadows and cover my position is, they just beat earnings. They want to get it at the top and they want to take it off. That's pretty much where this goes into. And so there was actually a lot of halts in this, because there was always a constant sell pressure, not only from the extension that it had, but also added to the idea that it had earnings. But even though that's the case, these all kind of fell into the same category, except for HUSA and IMPP and INDO. The ones that fell into the same category are NINE, ENSV, and USEG, to where the category that they fall into is pretty much just a gap up short. They all met the gap up short criteria. And now the thing is, it's a gap up short, all right, but it's a gap up short on its second or third day or fifth day, depending on which one you're talking about. And so when you get into that kind of category, now you're getting into multi-day runner status. At the end of the day, we understand that these are all just hyped from the oil. In my case, I ended up not trading any of these correctly. I only made one trade, and it was a wrong trade. It was actually going long with no plan. Legit, I'm in the middle of I forgot what I was doing actually. Yeah, I was in the middle of something, and I remember. I was in the middle of playing a video game, and I see a guy in the chat. He's just like, HUSA, it's making new highs. IMPP, it's coming back. And I'm like, oh, okay, cool. I'm gonna just let it be great. Because mind you, the date now is the 9th of March. So we've already seen all this come down. Now most of us are waiting for a bounce short, like into those consolidated areas. I was expecting to wait like anywhere from 3 days to like a week. I didn't expect it to like go all the way back up to 9. Usually once you see really big drops like this or the previous tickers, you expect like a 10% to about 15, some like rare cases 20% bounce after that. That completely went out of the window because I was so frustrated / self-sabotaging myself and stuck in the past and all this other stuff for not pulling the trigger when I had the clear opportunity. And like when I say clear opportunity, I'm talking about I'm legit at the top. I want to short, I want to do everything, but I also don't want to commit to too much stuff. And my intentions all over the place. I have to make sure I keep an eye on my SPY, another half like on a video game I want to play, and then the rest of it is more of just holding back my intention to put 5K in and then pretty much waste the rest of my day like just watching that. And then I won't be able to fully play the game I wanted to play. At the end of the day, it's like subconscious versus conscious versus like just straight stupid. But with that out of the way, let's go back to what I was talking about before. NINE, it beat its earnings. It falls into the gap up short criteria. Now we're talking about this went from 3 to 8. Now you have all these tickers that are going minimum 70%, some 100%. My favorite was ENSV, where it went to 220. And I think I've given you my intervals before, what I like to short. And so we're looking at 140, 170, 110, 90, 220. Yeah, and that's pretty much it. And this one hit 220 exactly. And the thing is, like, it hit 220 exactly, but I still had a very strong feeling that this was going to pull back. Now, with that in mind, it went to 220 exactly at 8.75. Now we're talking about this went from 2.3 up to 8.75. What my risk was going to be was 60 cents. And so that put me at like 920. But I was very confident in the fact that this still had a little more room to push. And I was expecting something like 920. You know, typical fake out kind of actions, like that extra 1% of the entire range added on top, just for those people to like get faked out. Yeah, slippage pretty much. I was trying to calculate that slippage. And so the whole time I'm dancing in between the 8s and the upper 7s, just waiting for this to go up to 920 before I shoot my shot. As you can see, it didn't happen. And then, you know, I had my other rigid rules and I didn't chase. Like when it came back, I still had my chance. I knew it like had a less chance to actually, you know, break that top. Still didn't take it. This is the only one I borrowed, by the way. I resolved myself to only borrowing one because at the end of the day, my rules were, this is Amex stock. I don't want to do it. I'm tired because I played too much video games and ate wrong and other stuff like that. I don't want to do it. But the opportunity was there and it was just too much to pass up. So I gave myself an ultimatum. I said, you can do one. And so already at this point, I'm conflicted. And so, you know, giving myself that almost impossible situation, I think that was actually like a self-sabotaging technique that I practice a lot. You know, another example, one of my self-sabotaging techniques, you'll see them like in one of my snippets later. And that's pretty much where I try to dodge the ticker, or like watching the ticker at the opportunity where I know my impulse is going to be the highest. But the thing is, that's actually where I'm supposed to short. It goes into that kind of situation every time. Now, with that out of the way, back to the analysis. So ENSV, again, it met the gap up short criteria. The gap up short criteria. NINE meets the gap up short criteria. USEG, yeah, it also met the gap up short criteria. And so we're talking about that extension. We're talking about it holding its gains. And you're only aiming for that 20-30%. Like, it's doing all that. At the end of the day, we still had 3 more tickers. And on Monday, one of those tickers was BBBY. This is Bed Bath & Beyond. And so what happened with Bed Bath & Beyond, this one is not a merger, but it's more of gaining an asset. And whenever you gain an asset, it's always great to go into these stocks because they're going to get hyped. The asset they gain on Bed Bath & Beyond is the co-founder of Chewy put a 10% stake. Also, the GameStop CEO put in a 10% stake for Bed Bath & Beyond. This was due to consumer spending and other like very sensitive topics during this time where the president is talking about CPI report, Ukraine war is like hitting our economy pretty hard. The prices and inflation is going a little bit out of control. A lot of the OG is what I call them. OG companies, they're starting to put into like other companies. And Bath & Beyond, I don't know the full situation, but they put in 10%, but I can imagine. But with that, it made this jump from $16 all the way up to $35. Now, the reason that this is important, if you go all the way back to May, it's a little bit out of our typical 6-month range that we like to have when it comes to like bounce shorts. But this one actually fit a decent bounce short. Like, it had 109 million over a $17 range. And right at the middle, that's where 35 is. Now, if you go to the day where this was, it just got that news that GME and Chewy just put in a 10% stake. In the pre-market, it went up to 35. Now, that bounce short, it hit right in the middle, like a very typical bounce short statistic. But this is one of those things where you would have had to wake up early and see that this was extended to the point. And like, is there resistance in the beginning? Do your morning due diligence. But again, this morning, I'm still mad about it. I didn't get up. Like, I got up, but it was a horrible morning. If I went to the computer, I would make some type of mistake. Like, I legit was so healthy and disciplined for so long that I forgot how to just preserve through feeling bad. And so, if anything, this teaches me a little bit of moderation. Like, I can't be too much of one or the other thing. But that's just my own personal insight on that. At the end of the day, this was a bounce short. Went up to 35, came down. Usually with the bounce shorts, you can see something close to like 50% is what I want to say, but I'm actually not that confident about that. Because like this one actually went 75% below, but I don't think it's always like that. Yeah, so normal reward on this, you want to go for 20 to 25%. Yeah, so normally when you short these, you want to go for a quick 20-25%, and you want to put in half at the open. In this case, since it already went and hit the resistance, didn't push at all, you would have just like wrote that half all the way down, probably waiting for some type of bounce before you add it again. But my rules tell me to just add it half. But again, this was on a Monday. I was tired, not disciplined, addicted to a video game, and like everything just went out of the window. Real mad. But other than that, we get the big boy in here, which is INDO. Now, INDO, this guy, he Indonesian gas company. Yeah, it's an energy company. It's also another Amex. And remember what I said before about Amex. I don't like Amex. I don't like New York Stock Exchange. There's always some type of manipulation, even though it's all manipulation. There's always some type of, they're going to wait till you get to to like right at the top. Then that big buyer comes in, right? So you get right at the bottom of the day. Then that big seller comes in, like just so they can make a daily high or daily low and then scare the crap out of people. You know, same thing when, you know, they see a little bit of momentum or a little bit of weakness. Like they're very good at what they do. That's mostly why I stay away from them. But with the NASDAQ, there's a lot more restrictions where it's harder to do that. So this is the stuff that you do when you want to be very skilled or you want to really test yourself. At the end of the day, I understand to a point what's going on. I just don't want to get into that point until like I'm at peak condition. And so anytime I'm not in peak condition, I just stay away from those kind of stocks. But back to INDO specifically. Now this is another one that's like, you know, late February, early March. It's just going crazy with, you know, oil going from $90 up to $130 over like 2 weeks, mixed with all the shenanigans and heartbreak from like war, president's address, pressure from the CPI report and hikes and everything in between, inflation. This one has been on the list of energy sectors or energy tickers that have been bringing back the small caps. And so a lot of people have been long in this. A few people have been shorting it when it does those early like gap ups and then comes back. Now, this has been getting a lot of attention. But mind you, with INDO and MARPS, the reason I saved these two for last is because they're micro floats. And so, you know, at the end of the day, I don't want to promote micro floats. But when you have a micro float that goes all the way up to almost $100, you know it's coming down. Because we've seen all the other ones like during December and like a little bit of January, I think. All these micro floats, they're getting attention. And a lot of people are just going to be bag holders for these. At the end of the day, again, I wasn't waking up early enough to actually get the shares. And when I did, you know, they were already gone. And, you know, it just kept going into that kind of category. We've been seeing a lot of weird price actions from things with like a little bit of volume going up 100, a little bit of float going up to 100, and, you know, just energy sectors being really bipolar and crazy. I was not trying to touch this when I saw there were other opportunities out there, which include HUSA, ENSV, and, you know, the rest of them. With MARPS, this fell into the same category. It's another micro float. It's another energy sector. And this went from, you know, $3 to $30. Now, at that time, you know, that's a Tuesday, I think. Yeah, that one's a Tuesday where you had all the other tickers like were a little bit higher priority. You know, add that to the streaming and then trying to answer questions. My awareness is going down. My attention's going down. Like I could barely figure out what I'm trying to do. Well, that's enough because this video just went on really, really long. So we're going to stop it here for part 1. If you like what you saw, please like and subscribe. And I'll see you in the next video. Peace.